All right, guys. Well, let's go ahead and jump into this. Before we get started, as always, need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Well, let's go ahead and jump into this. So, last week we talked about the crowded market. Let's go to the scanner. Let's go over here. Let's talk about some of the big signals that we've got on here. So, this is like a part of the program that I feel like is probably the most underutilized is the crowded market indicator on the scanner. And um, because it really, if you think about it, this is probably the best long-term signal that we have because it's kind of telling you like which currency pairs are poised to see a big bank move in the coming weeks, maybe even the coming months, right? So for example, the like the pound yen, we've been calling this trade out for a long time now. We've been saying that pound yen is going to see a huge sell-off. We've been saying this for like 2 months now. And you go look at it and it's like, holy smokes, that was a good decision, right? Another one that is really good is the let's see, USD JPY. It's a strong sell. We've been calling that one for a few months now, and it finally is starting to crack open, which is awesome. Um, so I was hoping to talk a little bit about this and some strategies on how you guys can use the crowded market maybe more effectively. Because I think a lot of people maybe they know what the crowded market indicator is on the scanner and what it means, but maybe they don't know how to use it. So I was hoping to go over a couple of strategies tonight on how you can use that better. We've got like 130 people in the program right now, and there's like a group of like 5 or 10 folks that just trade the crowded market indicator. It's kind of like their evil secret weapon. And so I'd love to see more people kind of adopt it and use it because I honestly think that thousands of people could get use just out of that alone. Because it kind of sets you off on like which currency pairs are not necessarily guaranteed, but they're likely to see a big macro reversal in the coming weeks and months, right? And so if you are aware of that before it even happens, there's huge opportunities that you can take advantage of, right? So I think one of my jobs is I got to figure out, not just figure out, I already know I've been doing this. I just got to help more people um, use the crowded market indicator more effectively and how I would approach each trade. So I'll even go through a couple of charts with you guys and we'll analyze a few pairs and kind of go through that. So, um, oh, nice. Let me read this. So Roger says Euro franc just broke a downtrend to the upside. I found it because I was reviewing crowded markets. Oh, that's awesome. Very cool. That's very cool. Um, yeah, well, that'll probably be one we go look at too as well. Okay, so first of all, let me explain what crowded market is for those that don't know, and then we'll jump into the application of it, like actually taking the trades and so on. So first of all, um, I actually got this idea from another trader that I was listening to who also teaches the COT report. I don't remember the guy's name, but I was watching this YouTube video one day and this guy was talking about how um he was actually talking about it in context of sentiment. So like if you actually look at the sentiment index right here, which this is sentiment, right? So when you filter the sentiment index like this, you can see like for example the Euro Aussies at the very top here. So 84% of retail traders are long or short, excuse me, on the Euro Aussie, and only 16% are long, right? So what does that mean? So retail traders, when they pile into a position pretty heavily like this, what that means is that they're pretty sure that the market's going to go down. So if the Euro Aussie is 84% long, my guess is without even looking at the chart, my guess is that that currency pair is going up right now because um, um, yeah, it's probably going up right now because 84% of retail traders are short and retail traders tend to want to buy low, sell high. And so whether the market's actually higher or not, they'll just go ahead and sell because they see the market going up. And so they want to time the top and they, you know, want to see if they can ride the market down when it finally comes down. So, in fact, let's actually do that. Let's go pull up the Euro Aussie. And my guess, like I was saying, is that the Euro Aussie is probably going up right now. Let's go take a look at it from a not a 15 minute. Let's do like a higher, much higher time frame. Yeah, so here's a 3 hour chart, and yeah, it's been going up for quite some time, right? And so that means that retail traders are probably going to be trying to sell this. Why are they going to be trying to sell this? Because they think that this is the top, right? And so this guy was explaining that when retail traders get to a crowded position, um, where they're just all jam packed into one corner of the market, like they are right here, that you should expect this to start to reverse at some point, and go the opposite direction. So if they're super short, once they get to a breaking point, he kept basically said once you see them get to like 90, 95% short, that's when it's imminent. Like basically there's going to be some kind of reversal. So you don't really want to be following retail traders when it's at like 80% or 70%. You actually want to stay clear of that. But when they actually start to get to like 90%, 95% short or long, that's when your antennas should start to spark up and you should get excited about the possibility of a major reversal on the horizon. I'm going to refresh this because some of the data is actually still trying to load right now. Um, One of the downsides to the sentiment data, it's a good and a bad thing, is I collect data live on the scanner for sentiment. And so sometimes it takes a second to load up. Um, let's see. Okay, so look at this one. Here's the New Zealand franc. So the New Zealand franc is at 96% um, long right now, 96%, and only 4% are short. That's a breaking point. So when I see that, that tells me that the New Zealand franc is actually probably going to start to see a move to the upside soon, because um, that's at a breaking point. Okay, so breaking point again is anything probably above 90 to 95%. That's probably, but you don't want to just take the trade just because of that. That means you should go out and investigate and potentially set up something. So you can, by the way, you can use crowded market for sentiment and for the COT data. So this one is just me manually going in here and looking at sentiment and being like, okay, yep, NZD Frank's at a really high spot. Retail traders are going to get whooped here, right? Like that's what I'm doing right now. If you go to the crowded market indicator, it will just filter for you by COT data. So it'll tell you, okay, these like, what is this, 8 or 10 pairs are 5 out of 5 stars. And so since they're 5 out of 5 stars, those currency pairs are likely to reverse from a COT data standpoint. It's the same thing. When the banks get a super long position, super big long position, they also have to do the same thing that retail traders do. So, which is they have to go the opposite direction of what they've been doing. Once everybody's bought up everything, if you're the banks and you own all the buys on a currency pair, you just have it all and you have a monopoly, you're going to have to take profits at some point. So how do you do that? Well, you have to close your position. How do you close a position? You have to sell it off, right? So you have to find a willing buyer, right? So that's what banks do, is after they've sent a pair, like that's what happened to the pound yen, that's what happened to dollar yen over the last month and a half, is these pairs have gone up and up and up for months. The crowded market indicator was shouting at us for months saying, hey, just so you know, this is probably on the horizon. And then boom, just like that, over the last month and a half, these pairs have collapsed, right? They've collapsed, and the crowded market indicator was all over it, right? But like I said, not everybody like knows that. A lot of the trades I try to do, like I will be honest, like I try to entertain a lot of people with the price action trades because they're a little bit quicker. Like I'll try to, we had our pound CAD trade that's doing great. We have our our Aussie yen trade that we did from last week that made 380 pips. Those are great. And a lot of the times I'm doing this in the sidelines. Like I'm analyzing this stuff myself. But I just want to show you guys how you can find like huge trades before they even happen.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
But these are the types of trades that change the market altogether. These are not trades that you would expect to have happen over like the next well, with the sentiment ones, those could be right away, but the crowded market ones, those could take weeks to develop. They really could take weeks, maybe even a month or two. So, don't get and you can analyze the charts after you come to the crowded market, you can then go to the charts, and I'll show you how to do that. There's a process to it, but I'll show you how to do it. So let's actually go take a look at like this crowded market concept, right? Here, let me try to reload this, guys. I apologize. There's like 4 or 5 currency pairs that are trying to load right now. And so I just want to see if we can clean this up. Oh, did it? Oh, nice. I think it actualized. Okay. Perfect. Okay, good. We got it. Yeah, so let's pull up. So NZD franc, that's probably the most biased right now. Wow. Even just while we were talking, it went to 97%. Went from 96% to 97. So this is clearly at a breaking point, guys. Like crazy, crazy breaking point. This is a huge opportunity, actually. I haven't even looked at this chart. Like seriously, I haven't even looked at it tonight. I just know from this information that something's about to break here. And so I want you guys to learn how to do this yourself and just come into the scanner and hop in here and look for these types of opportunities just like without being told or anything. You just know what to do, right? So what is this? First of all, before we go look at the chart, I do want to make sure that everyone knows what we're doing. So since I just filtered this, I can see that 97% of retail traders are long right now. That probably means that this market is what? You guys tell me in the chat box. What's this market doing if 97% of retail traders are long right now? Do you think that market's going up or down? Yeah, it's probably getting absolutely smashed. Going down, absolutely. Going down would be an understatement. It's probably yeah, it's getting absolutely crushed, right? Without even looking at the chart. That's how you read the data, is it's probably going down pretty heavily. So because of that, normally we'd want to actually trade against these guys and actually sell. I'd probably normally want to sell as well. But when they get to this type of a high of 97% um, long, that's a breaking point. And so when you stretch out a rubber band, eventually that rubber band has to pull back or it breaks, right? When you stretch out, the other example I have is like the accordion instrument. If you stretch out an accordion, um, and you eventually pull it all the way to full extension, you can't pull it anymore. It has to start to swing backwards, right? That's exactly what's happening right here. So this would be a huge opportunity of a potential reversal, but we'd have to go scan it out. So let's go and look at the NZD franc now. Let me actually switch back down to a lower time frame. Let's do like an hourly, and let's go to the NZD CHF. Ironically, this is actually going up right now, which is kind of what we were saying might happen. But yeah, it's at 97%. So you can see over the last, let's see, how long has this been going down for? Um, okay, so it started going down right here. This was the apex on the hourly time frame. This was on May 29th, and then it hit an apex low just last week. No, this week on Monday, hit an apex low. Okay. That would have been the ideal time to buy right there. Um, but yeah, so retail traders are super long right now. And so when they get this long, you actually want to start to look for buys because they're at that breaking point that we were talking about. All right. So I'm kind of mad that I didn't catch this on Monday with you guys, but that's okay. Let's actually go back to like say here. Um, this represents this line right here, or this yellow area represents the low. Let's go back in time and find out why the market stopped right there and shot up. There's got to be a reason why. So let's go do some investigation. Let's go back in time and find out why. Why did this market stop right there? Um, oh, you have to go back pretty dang far. Maybe I'll actually go, maybe I'll go to a higher time frame and see if I can find it. If it's ever been that low, who knows? Maybe it hasn't. Got pretty, oh, let's see, not quite there. Wow. Okay. So I'm gonna have to go out even higher. Dang. Nothing lower? Okay, never mind. Okay, so no, that is the lowest low. You're right, Stanford. It had, let's see, it had a time right here where it went pretty low and spiked up, had a time right here, spiked up, time right here, and so on. Okay. So this isn't the best example of what I'm looking for because I don't like to trade stuff like this where it's never been like the fact that this has never been lower is not something I usually like to speculate on. But yeah, it got to a breaking point and then the market started. So you can see, you can fast forward this here. It came down and now it's starting to rally back up, as you can see. So So one thing that we could do is wait for this to break through this trend line right here. If it breaks through that trend line and then pulls back, that would be a great break and retest type of trade. We could do that. But let's see if we can find another one. Let's see if we can find another one because I need to find stuff that has a pass to it so we can find liquidity zones that make sense because I honestly don't think I would have really liked to maybe that's why I stayed away from it. I don't know, but I don't think I would have liked to have speculated this low because it's never been this low before. That is, in fact, the lowest low it's ever been. Um, but let me go find another example. So you've got like, okay, CAD franc, it's at 91% long. So that's pretty close to a breaking point, if not already there. Let's go see if that one hit a low this week. It's been up today. Is this a low? That's the thing. I'm wondering if this is like the lowest low it's ever been um, on this cat franc. Let's see. This might be the same story though, so I don't know if I want to spend a lot of time here. Did it ever hit this low before? No, I don't think so. No, this is nope, that's the lowest low ever. Okay. So it's the same thing. Euro Frank's at an all-time low too. Yeah, that's the thing. You can once they get to that high distress point of like 95% long, then yeah, you'd probably be fine to go ahead and go with the retail trader at that point, and actually buy with them once they get to that breaking point. But I don't like to speculate that. I like to find stuff that hits with liquidity. So, okay, maybe I'll have to find something else, but um, I might not be able to do this with sentiment data. So the other way you can look for crowded market stuff, guys, is one way to do it is through sentiment, and sentiment is usually a more shorter term opportunity for crowded market. So this is the way you would do it. Let's see, this Euro Aussie, it's at 85%. That's not enough for me to get like excited about. Like that could certainly keep going um, to the upside before that goes down. So I don't know if I'd use that one. So let's do more just straight crowded market from COT report. So there's two ways to trade crowded market, guys. You can do that through sentiment or through COT data. Either's fine. Now this one, you're not monitoring what the retail traders are doing. You're monitoring um, what the banks are doing, right? So if you have 5 out of 5 stars, that means that again, the banks have a huge position on those pairs and they're likely to start to reverse soon. Some of the ones that have already started are pound per CAD. We're actually making money on that last I checked. I don't know what it's done. Has that gone up or down this evening? I don't know. If has this looks like it hasn't done much this evening actually. But it did really well for us this morning. So this is a prime example. I'm actually feeling a lot better about this one actually. Feeling really good. So we took this trade yesterday as a sell stop order. It triggered nicely. We're up, I don't know, like 80 pips on this right now. Let's check. No, oh well, we're up 120 pips on it now. So we're doing really, really well there. So this is one that's actually in crowded market stage. Why is this in crowded market stage? So again, when you go back and look at the scanner, you can see it's 5 out of 5 stars and it says strong sell in the long term column. So these two work hand in glove. Crowded market and the long term signals work together. Okay. So very important that you recognize that. When it says strong buy or strong sell in the long term column, it's a guaranteed 5 out of 5 stars. We've just programmed the scanner to be that way. It just works that way. Okay. So the pound CAD is 5 out of 5 stars and it says strong sell. And so what that means is that the banks have a huge long position and they're at risk of taking profits soon. So if they start to take profits on their buys, what's that going to do to the market? It's going to send the market down because they're going to be selling a ton, right? And so that's why we've issued a long-term strong sell signal is because if I had to bet right now where the pound CAD will be in 2 months from now or 3 months from now, I'm very, very confident that it will be at a lower price than where it is today. Okay. That's basically what I'm saying. So anything between like this week and the next 3 months is basically your crowded market thing. So a lot of people have asked me, like, Steve, why would I use something if I'm a shorter term trader? Why would you use this? Well, if you're a shorter term trader, you probably wouldn't be using this. But if you're looking for like a swing trade opportunity that you can nurse over a couple of months, like this is a huge trade. Very accurate trading opportunity as well. And one of the ways you can make it super accurate, and I wanted to show you how you can do this, is if you go back to this chart, when you know that the banks have this huge position and they have to sell it off, like so here's a 3 hour time frame. You can see it's been going up since like September of last year. It's basically just been going up. If you know that they're about to sell off, all you're doing is you're going to these higher time frames, like the 3 hour, the 4 hour. The lowest high time frame you'd go to is like the hourly. The highest high time frame you'd go to is like a daily. So anything between the daily and the 1 hour, you're looking for supply zones where the pound CAD could pull back. That's the ideal way to trade this. Okay. So you'd come over here and you'd be like, okay, here's a 3 hour time frame. When was the last time the pound CAD was at, this particular juncture, right? And then what you would do is you would, extend this to the left and be like, okay, when did the market, I don't know if it's ever even been this high. Yep, it is. Oh, there you go, right there. So that matches up with some liquidity. Like this general area is a liquidity zone, and this general area is liquidity as well, right there. That makes a whole ton of sense now that the market pulled back where it did, right? Makes a ton of sense that it pulled back there because the banks had this huge long position. It hit a high. My guess is they took a lot of profits off of their long position and said, hey, this is a good price. Let's go ahead and take some of that off the table. I guarantee that's exactly what they did. Um, and so that's why you're seeing this pullback so aggressively right now. This aggressive pullback is a bank move, and which is exactly what we're participating in. We're participating in a sell off of long positions by the banks. That's exactly what's happened here on the pound CAD. So, how can you trade this? Well, one way is just to look for like what we did is the price action trade where you did a structure break and then we found a nice breakout opportunity and we wrote that down as we're doing right now. Another way to trade this is to use the modified martingale. Some of you guys have seen me trade this before, but the idea with the modified martingale is you are basically waiting for the market to, like for example, if the market goes up, let's say it just kept going up, you're placing sell stop orders ready for the market to go down. So if it goes down, you're going to trigger into sells. But if it decides to keep going up, you don't add sells. You just keep adjusting these sell stops until the market actually starts to crack down to the downside. That way you start to scale in to a trade that the banks are selling into as they start to break down. But since you don't know exactly when they're going to start to break down, you're just kind of watering the opportunity, spreading your seeds around, and you're just kind of like, okay, I'm going to put a trade here. I'm going to move this trade up, a week later. I'm just going to kind of adjust these closer to the market. And then when it finally cracks to the downside, that's when you make all your money, right? So that's one way to do. That's actually probably the best way to trade the crowded market is to kind of identify the zones where you think on those higher time frames where you think the market may pull back, and then you either place trades there or you add a series of sell stop orders ready for the market to crack in your favor. So this one's kind of early on, guys. Like the pound CAD, I'm glad we're already in this trade. But it kind of makes me wonder if we should actually increase this target. Like, should we actually move this target down to this next level, or should we even look at areas down here or down here? Like, very much makes me wonder if we should do that because I wonder if this pair is just getting started. It very well could be because it is in crowded market phase, and it continues to be in crowded market phase. So, and let's actually look at let's look at the scanner. What else does it say? Sentiment hasn't flipped yet, so that's another thing that would need to flip. Oh, that's on the EuroCAD. Pound CAD, it's at a buy, so yeah, it needs to flip. Also, generally speaking, over the last 3 and 5 weeks, the banks really haven't sold off yet. So that again, that tells me that the banks really haven't gotten started yet. The scanner, as far as crowded market goes, is aware that the market's about to sell off, but the 3 week and the 5 week shifts haven't quite caught up to that fact yet. And so to me, that says that the pound CAD probably hasn't even seen its huge moves to the downside. That's probably coming, but it hasn't happened yet. So anyway, this could be a huge trade. In fact, let's see, is this a trend line? Let's see, can I draw this out further? Let's see, can I draw? I want to see if there's another trend line here that I can draw out. Um, yeah, that doesn't really draw very well. Well, that one does actually. Yeah, so there's definitely room for the market to go down and kind of tap into this trend line right here. So yeah, I wonder if we should increase that take profit just a little bit and get a little more greedy with this trade that we're already in because it's looking pretty good. Okay, so there you go. So that's another example. Let's go find another one. Let's go on the hunt here again. Let's find another one that's in crowded market stage. Does anybody have one you want me to look at? Let's see. Euro franc. This one has its crowded market. Okay. The banks are have a huge long position, relatively speaking. And so this one they're suspecting to move lower, which is crazy because I think that one's already I think this one is already going down. Like you said, it's already at an all-time low. So wow, that probably means that actually that's surprising to me actually. That probably means the euro franc has a ton more to drop. So I mean, maybe it goes up a little bit to some of these areas, but it kind of makes you think you should be selling this anytime this thing goes back up. Um, yeah, if I'm reading that right, let's go back to the scanner again. So it says you look at the euro franc. Yeah, so the as far as sentiment goes, they're indicating that well, so right now it's a strong sell signal as far as sentiment goes. And the at the current moment, it's really not quite at a breaking point, but it's getting close. Again, I'd like to see that in the 90s or even mid 90s for that to be at a breaking point. And so that's why I wouldn't say that that's going to go up yet. But the long-term signal is a strong sell, and it's 5 out of 5 stars. So the fact that that is a strong sell tells us the banks have a larger than usual long position. And if that's the case, then the euro franc will probably experience more movements to the downside in the coming months. So this is probably not done yet, actually. This is probably going to actually, maybe it goes up for a time, but it might actually just continue lower, which is very interesting to me. Okay, so let's find another one. Um, let's find one that hasn't, like the pound CAD that's just getting started. The pound CAD's just getting started. Actually, I do want to look at this one. Here's the dollar yen. This one is finally cracking. Okay, finally. Like the dollar yen, it's a strong sell right now. You can see the shifts have finally caught up to that signal. We've been calling a strong sell in the long-term column for months now, and it's finally happening. And even the shifts, as we were just saying, are catching up to that same signal. And so if you go look at the dollar yen, check this out. It is, I mean, it's up today, but overall, when you look at this from a 4 hour perspective, check this out. It had an apex here on July 11th. And since July 11th, look how big of a dump this thing has taken. Like, I mean, this is crazy. The sell off, the absolute cliff side here is incredible. I mean, this is 1,500 pips of actually, if you go from top to bottom, that's 2,000 pips. Just absurd, absurd amount of selling. And the scanner knew this. Like the scanner, I don't know if you guys have been watching it, but like pay attention to this kind of stuff because the scanner called this for months. And I remember in May, it wasn't in April. In May is when we got notice that this was happening. So this was May right here, this circle area, and we knew that the market was crowded. And I tried to sell it back here. The problem is a lot of people don't have patience for this, including myself. Like I struggle with this too. But like I started selling the dollar yen back here thinking I thought we were really close to the sell off on the dollar yen back in May. And I remember telling people like, hey, yeah, guys, look, the dollar yen's gonna have a huge sell off. But then we kind of gave up with it because, the next like month it actually just continued up. So we kind of gave up with the sell, which I'm kind of mad that I did that because just a month later is when this happened, right? So that's how powerful the crowded market is. Um, it will call out 1,500 pip trades a month in advance. Okay, so that's the use of this right here. So if your time frame is synced up with it and you're okay with accepting those types of signals, recognizing that the long-term signal isn't necessarily a great weekly signal, if you're okay with that, um, like you'll get a lot of value from the crowded market indicator if you're just kind of seeking those types of opportunities, right? So there's one. Another one that happened recently is the pound yen. This is the same type of thing. If you go look at the pound yen, the scanner had this crowded market all figured out like a month ago, or back in May is when we started to talk about the possibility of a pullback. So here's May right here. This is May. That's when we started talking about the possibility of a big pullback on the pound yen. And that was pretty early, as you can see, because it actually did for the next month and a half just keep going up. And then the last 3 weeks is when this happened right here. So it only took 3 weeks for that to pull back like it did. But I don't think it's done yet because if you look at, again, if you go back and look at the um, scanner, it's still a strong sell. Um, it's still a strong sell in the crowded market, as you can see. And it's even had really big shifts here in the last 3 weeks, but it's still in crowded market territory, even with those shifts, which is crazy to me. That's crazy that it's still in crowded market stage. It just tells you how much this thing has been overbought over the last several months. So let's actually go back to the that chart. I wonder if the pound yen, in fact, let's look at these kind of like candles right here. I wonder if this pound yen is we'll see how that ends there, but I wonder if we're going to go to places like down here. Are we going to go to this level? Are we going to go just below these lows? I think it's possible. So this move may not even be done yet to the downside. And I'm not just saying that just to say stuff. I really mean that because it's still in crowded market phase. We do have shifts that are starting to indicate selling pressure. Um, I know today it's up a lot, like pound yen's up today. I'm not talking about today. I'm talking about the next month, talking about the next several weeks, right? Is a sell off down into here. So you think you're going to all-time lows? Yeah, we'll have to see on pound yen. I don't think so on pound yen, but with the yen strengthening like it is right now, the yen has actually gone up so much. That's going to cause more weakness on this particular pair as the yen goes up, and so you're probably gonna see this one go down to at least here. But there's levels. I mean, heck, there's levels down in here that we haven't touched in a long time that have great liquidity right in here. I mean, who knows? This could have another several thousand pips, and the scanner seems to say that at the current moment is that we haven't even really gotten started yet. That's when we finally found out that we were in crowded market phase was over here, and for the next month and a half, it just kept going up. But then just in 3 weeks, it broke loose, right? So how do you trade this, right? Like how do you make money with this when this happens? So I just wanted to highlight this. So because you could lose a lot of money if because your timing can be really off with the crowded market. So how can you sync up with this, right? Well, here's how you do it. So I think the safest way to manage a long-term trade is to wait for the market to come to you. Don't force the trade to trigger right away. So basically, the idea with this is as this market's going up, here's what I would do. Let's do a rewind. Let's do a rewind back to here. Okay. What I would do is place a series of sell stops, right? Like 3 sell stops or 4 sell stops ready to go to take advantage of this move down. Then let the market fast forward a little bit. Let's let it let's let it do its thing here. Okay, so it goes up, right? Pause, pause, pause. There we go. Pause. There. Okay. As it goes up, go ahead and replace these. Like move these sell stop orders up. Move them up, space them out, an average daily range or so, and or a half an average daily range would work fine too, depending on how many you want to put on. And then rather than triggering in right away, don't like force the trade to trigger. Just move your sell stop orders every week or so. closer to this market. So you're basically hunting for a huge opportunity. This is a huge trade. You're just basically waiting for the market to come to you rather than you going to the market. Okay. And then you just wait for it to do its thing. And okay, that one triggered right there. Great. And then you just keep waiting, keep waiting. And then you're like, oh, okay, it's going to go up a little bit more. So what you'll do here is you'll just, replace these here, pause and, move your sell stops up, move your sell stops up like I've just done here. And then you let the market keep doing its thing. Okay, it keeps going up. So you're in one trade so far, but again, you're just moving these up so that when the market collapses, you can trigger into these, right? And then it keeps going up and it keeps going. And then here it goes, boom, finally starts to collapse right here. And now you're starting to trigger into those trades pretty safely, right? Because you knew this move was coming. You knew that the banks were selling off wow. Like you knew that, like we knew that from the crowd market indicator. You're just basically preparing. You know that's what the banks are trying to do over the next like month or so. So you're just like every week you're just readjusting, readjust, and then when it finally boom happens, you're positioned in the best place possible to be there. So what are some currency pairs you could do this on right now? Well, you could still do this on the pound yen because this move is not done. Okay, we're just getting started. Retail traders are going to get smoked. They're already getting smoked on this trade. My guess is they're going to keep getting smoked on this trade as this market continues down over the next couple of months. It is not done yet. Pound yen, if I had a bet between now and the next 2 or 3 months, this price right here is a high price. Yeah. So what appears to be a low price right here after such a sell off, we'll look at and be like, whoa, look up there. That's such a high price. Yeah. That's probably how it'll be in 2 months. Okay. It's like, I'm just letting you know, like, kind of what to expect because that's what the scanner is trying to tell you right here. So another one that could be really, really good if you're looking for an opportunity is that pound CAD, right? Like if you wanted to trade the pound CAD, that one hasn't really hit its huge stride yet. It's just getting started. Um, as you guys already know, like this move to the downside is just getting started. So this is one where you could come in and place a series of sell stops and this one, who know, I don't even know how far this one will go, but I'll at least tell you there's a bunch of areas right in here that I bet the banks want to go to. And I mean, just that alone, even if it just went to there, that's still ultimately that's still 1,100 pips away, right? And that's what I think the crowded market is trying to tell you is like, hey, we're gonna go 1,000 to 1,500 pips from here to the downside. And it's not going to happen this week, but in 2 months we'll get there, right? Yeah. So what Anthony says, what kind of risk is putting on those cells? It's kind of up to you. What I've kind of told people to do is either a half or full. Honestly, if you're taking that kind of a long-term trade, I would do a full average daily range on each sell stop order. That's what I would do as your stop loss. So just grab that off the scanner if you're going to place pending orders and space them about a half an average daily range apart. So I do like 4 trades, space them a half an average daily range apart, um, and then um, a full stop loss or full ADR as your stop loss on each sell stop order. And then you just have to go out and figure out what your risk is. So if you wanted to allocate like 2% of your account to that entire trade setup, then what you would do is you would take 4 trade or 2% and divide it by 4. Okay, that's a half of a percent per trade. So you're risking a half of a percent with an ADR as your stop loss. That would be a great example of how to trade this. But it is kind of up to you on how much you want to risk. But like I think a 2% for the entire setup is a normal amount of money to risk. Very normal. Um, I mean, some people might even risk more, but yeah. So if you're going to take 4 sell stop orders on that pound CAD, you would be like, okay, when I go to the lot size calculator, I'm going to do a half of a percent risk on each trade and use the ADR as my stop loss. Okay, makes sense. Cool. Nice. Yeah, that's what I would do. And this is one that is very early on. So you could set this one up and leave it for a month or two, and I think you'd be very happy with this one. So all right, guys. Any other questions before we get out of here? It's a very productive night. We got a lot of good webinars in. I'm gonna post these. I know the overnight trading call just finished rendering while we were talking, so I'm gonna go ahead and post that right now, and then this one will be done rendering in about 30 minutes. So, all right, guys. Well, thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar.